we're going to talk in this video about what we're seeing in the markets and also about the treasuries and the yields spiking up on them so much. What in the world is going on with it? But I really want to address the volatility, but to say that the markets were volatile just doesn't quite cover it. So I was trying to think, how could I express to you guys just how volatile the markets are from what we're seeing? I mean, 9.2% in the Qs yesterday for that swing from peak to trough, and then 7.5% today for the Qs from peak to trough. That kind of volatility is like ginger siblings battling each other kind of volatility. Or maybe 15 tacos at Taco Bell with 2 44-ounce sodas, Baja Blast Mountain Dew on top of it, sort of volatile, like that gastrointestinal feeling that you might feel. Or maybe it would be more like your boss telling you for the 11th time how to do your job the wrong way because you're the one who actually does it. You know exactly how it goes, but you can't say anything because, well, they're your boss, kind of volatile. And then I was like, well, maybe it's like telling your wife that her sister's a better kisser, kind of volatile. I don't know what you want to say about this, but holy cow, the markets are absolutely wild and insane right now, and no wonder that they can be so infuriating to trade in. If you guys want support during this time, if you want to see what I'm buying, selling, my analyses, the other panel experts as well, there's a Discord that we have together. You guys can find the link for that down in the description. Click on that, sign up for the earner tier. You get access to all of the products and services over there, as well as the support that comes along with having a community of thousands of members and the most positive and awesome community that I've ever had a chance to be a part of. So guys, with that said, I want to dig into the charts here and we'll talk about that volatility that I was talking about. And by the way, for, whatever it is, don't tell your wife that her sister's a better kisser. Maybe some things are left as a secret. Maybe don't kiss your sister, your wife's sister. All right. So let's get into this. So when we look at the Qs, down 1.8% today, but that's not the wild story. That there's actually a couple wild things here. One, I mentioned a 9.2% swing from Monday from peak to trough. And then when you look at Tuesday from peak to trough is about 7.53, I think is what it comes out to be. But what's wild about this is that the high price yesterday was 444. My goodness, 443.14. And then the high price today, 443.14 to the penny. The exact same peak on both of them before getting a massive rejection and selling wildly down from where it was at. So we took about a 5% dip from peak down to where we closed yesterday. And then today, after peaking, man, we closed down. What in the world happened? We had news coming, I don't know, it was coming out of China or between the US and China about an additional 50% tariffs on top of the 54% that was already there to be enacted Wednesday. That's tomorrow. And the markets hated it. They absolutely did. And I got to tell you, I did lock in a swing trade on NVDL, which is a 2x leverage Nvidia play. And I got 12% when I got stopped out on that one. I did lock in some of those gains. I was up 20% just over a couple of days. And I posted that over in the Trade Wins channel over at the Discord. You guys can see that along with the other purchases that I made today. Did some more dollar cost averaging, did some more positioning, some more hedging. And like I said, the other panel experts do the same thing. That's available to you. But my goodness, that news, absolutely horrendous. If you want to see that really was China as one of those major catalysts, look no further than Apple stock. Let me bring this up here for you. So Apple stock, here's the weekly chart. You can see the bull channel, the fact that we fell down below. We wildly closed below the 200 weeks so far. If we go down to the daily chart, look at that pepper that you get on the chart for Apple. Man, that thing is ugly. We came up to resistance right at about 190. So 190.34 was the high price on this thing, ripped all the way back down, closing down 172. Apple barely moves. I'll tell you that Apple was one of those things that were rated as good as cash, but with all the tariff talk out of China and the fact that Apple's so heavily exposed to China, yeah, it just got routed today. Not much else to say for how Apple performed, down 5% from where it closed at yesterday. So yesterday it closed right around 181. Today it closed at 172. That was wild, but you saw what the market did as well. And like I said, Apple just took it extra on the chin. Now I did mention about my Nvidia trade that I made. So for this one, I was dollar cost averaging, but with NVDL, like I said, the 2x leverage one, but you want to track it through Nvidia itself because it's not as derivative as you would get for a 2x leverage ETF. So from this bottom that we got, and I saw it hit this resistance area, and I was like, I don't really want to sit on this in a leveraged ETF and pay that expense ratio over long periods of time. I'll just put a stop loss on this. That way, if it does happen to rip back down, Well, there we go. And now, mind you, this resistance there, if you watch my morning video, it was up there since then. As a matter of fact, if you go back in time a week or two ago, I had all these supports here before, but then we sold down through them. You can see we caught big support at the second one, much like the market did. Today rose up, and we were up pretty darn well on this one, up around 106 before closing down at 96. Mind you, that's 2-digit Nvidia. When the dust settles with this stuff, and hopefully it does sooner than later, Q2 could just be that messy quarter for us. Maybe Q3, we'll happen to see. It depends on how long things get dragged out and how long Trump has to keep the pressure on to draw a hard line for what he's at before countries start to really talk and work with each other. So that China news, it rocked the markets. It really took a nice little bounce, a nice little recovery that we had and ripped it right back down, which is why I'm not really doing a whole lot with options right now. The premiums are through the roof. It is a seller's market for options right now with those premiums as high as they are. I did snag some TMF, but let me show you TLT real quick and what it looked like. So we had, bring up the moving averages here. We were actually closing up above the 200-day. That's a bullish thing. Up above a descending wedge, bullish. Up above an inverse head and shoulders, bullish. Everything was looking real good. The volume started spiking up on us. Man, this is also most likely, without confirmation here, but most likely China dumping a lot of its long-term treasuries. And that is a very tactical move to dump those treasuries for the long term because, well, what's one thing that Trump's trying to do that China could actually push on that lever? What's one of the cards that they're holding? Well, if they're holding on to a lot of U.S. debt and they're drawing yield off of that debt, and then they just start dumping their debt, it floods the market with those bonds, those U.S. treasuries. The prices go down on the treasuries themselves, and the yields skyrocket. So the yields themselves, now mind you, the U.S. is trying to service their debt. And, well, debt to GDP really matters for that. GDP starting to soften on us, potentially even contracting. With the treasury yields, the bond yields going up, it makes it more expensive to service that debt. And I'll tell you what, let's go to the chart here. We'll bring up the U.S. 20-year yield for this. And when you look at the 20-year yield, so U.S. 20Y, there we go. Look at that, the last 2 days that we got. Man, oh man, that is, almost unheard of to see a single day where you make that sort of jump. That's 5% over the previous close. If you look at the range on that, that's way more than 5%. So from trough to peak on this, 7.5% in a treasury yield, at almost a 33 basis point move in a single day. It's been a while, so I don't know what this one was back here, but this is a pretty big pepper that we have right about here. So we'll see how big of a drop that was. That one right there, if I can get my cursor on it, there we go. That was a 4% drop that we had. Like, it's been a long time since we saw such a wild move on that one. And bond yields, treasury yields are going to move inverse to what we have for the prices for those treasuries. So then when you're talking about TMF, when you see this sort of move with the 20-year yield, then you go triple leverage, and then you start to look at TMF, you just get an even wilder move with that. So rejection off the 200, kind of bearish for us. But like I said, most likely that dumping of U.S. treasuries, if that's what China's doing, is just de-dollarizing, if you will. If they're just freeing their hands of the U.S. debt to push up treasury yields, man, oh man, that's quite a tactic. That really is putting some pressure, in my opinion, on the U.S. government to do something about that. And that is one of the levers that they had to pull. And it seems like they could be pulling it. I don't have confirmation of it, but I really do think that's one of the things that happens that lines up really well with what we saw with the markets today, with what we saw with Apple today. So let's get into the Qs. The Qs, there's that 9.2% swing, 7.5% swing. So we didn't get to fill those gaps. Man, we were dead even from Monday to Tuesday. Didn't get to fill those gaps yet. Way down to oversold territory, down below 24. We're actually at 23.11 to close the day today on the Qs. If we go to the SPY, where do we close at? It closed down a little bit from yesterday, but once again, just an absolutely wild swing here. Maybe, what do you guys think? What's worse? Is it the red-headed siblings that are battling each other kind of volatile, or is it the 15 tacos at Taco Bell and the 2 sodas on top of it, heavily caffeinated, by the way, to really inspire those intestines to start spasming for you, like maybe even start running a marathon after that on top of it. And maybe that's the sort of volatility that we're trying to talk about here. So let me click on the magnet and we'll talk about just the amount of swing, the amount of volatility that we got on that. 6.82% for SPY with that move today. Things were looking real nice. Thought maybe we had a day or two where we'd start to fill those gaps in there. Today just wasn't that day with those catalysts that we have coming out. And the thing is about volatility, I mean, it moves in either direction. And with these sort of wild swings, man, like for me, options, even though they love volatility, you got to be properly positioned for them. And I don't know which way is going to be which. So for me, pulling back from the options a little bit more, looking for places where I can find those deals, find those values. Apple could be shaping up to be one of those areas where we find that deal when the dust settles. I don't know that the dust is done settling yet, especially dropping down below the 200 week. Now, mind you, it's been a long time since we were there. So last time that we touched the 200 week was going all the way back to December of 2018 with the market sell. And the time before that takes us all the way back to June of 2016. Apple does not spend a lot of time here. So like I said, Apple, rockstar company. I believe they're still at the top at market top. They could be trying to trade blows with Microsoft. So 2.59 trillion MSFT. Microsoft, ooh, they overtook them. 2.64 trillion. Go Microsoft. You're the largest market cap company in the S&P. So just barely edging out what we had for Apple. And if we look at Nvidia, Nvidia's market cap coming in at 2.35 trillion after the sell that it's been under so far. So I am watching these companies like a hawk, especially Nvidia. I've talked before about being long-term bullish on Nvidia because I do believe that there's not a lot that's not being priced in for future demand that you're going to see for their products and services as AI matures and we start to get even more of an infrastructure build out. I think there could be a second wave coming for us where there's even more power-hungry demand, Nvidia-hungry demand than the market realizes. So moving over to IWM, I said that IWM lives below or comes to life below this green line that you see coming across here on this monthly chart. Let me take down the Fibonacci retracement because it's in the way. We'll take down these horizontal lines because they're kind of in the way. There we go. Put that down for you. Put that down for you. There you go. These, by the way, that you see, these are those price targets that if we continue to sell, we broke the 192. We're heading down towards 160, which happens to be about the bottoms here. The tops there, that could be a major bounce for us if we head down there. That coincides with the 38.2. Go back and watch my other videos where I talked about the retracement, the Fibonacci retracement from October 2002 until the most recent peaks, especially where the Qs are involved. That's a good video. And I'll tell you what, we nailed it. Watch my video from this morning. I talk a little bit about it there as well. So Bitcoin finding a little bit of bounce off support right now. I talked about the descending wedge. It's down at support levels. At the moment, we'll see if we get that bounce coming back off of this. And down below that, we have some fairly heavy support. So I took a hedge on Bitcoin, just one final way. It's a fairly cheap way to hedge some of my long positions just in case it does continue to sell. And this is one that if we start to see risk start to come back to the markets, I think Bitcoin's going to have a wild time along with it. Now, mind you, this is still, in my opinion, the fact that we haven't sold off more shows the strength that we have for Bitcoin, that we could potentially be seeing more of its inflation hedge, more of okay, well, United States treasuries. Oh boy, what's going on with that debt situation? What's going on with the dollar situation? You know, gold is at all-time highs right now. I guess maybe Bitcoin might be an okay thing. And we actually had decent volume going into yesterday. So I don't know that Bitcoin will sell down more, but just in case it does, I wanted to be ready for that part of it. And I do have net long position, by the way, in the market itself, not necessarily with exposure to Bitcoin directly, but it is one of those ways that I can more cheaply hedge those long positions just in case we do get that sort of tumble coming from it. So Bitcoin being very well decentralized and the catalyst that it has going for it, eventually I think long term Bitcoin's going to be a big winner for us. In the near term, I do wonder what else we're going to see in terms of liquidations. If we do get more, if the market continues to sell down, and that could even mean selling some of those positions in some of the areas for Bitcoin, for example. If we get some forced sells taking place, things will get real nasty, but that could also be about the moment of capitulation where we start to go contrarian and head back the other way. Maybe that happens around the 38.2 for the Qs. We're going to have to watch and see. I do want to mention with XRP, as we look at the chart here, we are currently down below the 200-day. Maybe we get some softness there. We're going to have to watch and see what happens with it. We have fallen out of the bottom of the consolidation pattern down below the 200-day, 50 down below, the 20 down below the 50. So right now things are looking near-term bearish for XRP. And I talked before about a head and shoulders pattern that we have. We have dropped down below the neckline, but we do have kind of an extended right shoulder. Not the best setup for that. I also mentioned with that came a 54-cent price target. Man, oh man, you can be mad if you're bullish on XRP because I said 54 cents. First of all, if you watch that video, you'll know that I said I don't think we get down that low. But I also said that if we do get down that low and I'm wrong about it, I think the incredible opportunity is waiting for us. And that starts to put in a very real 10x potential for something like XRP. So let me summarize this. Let me wrap this up for you. So that volatility, I'm sure you guys have some creative ways to talk about that volatility. Put some ideas of what you think is volatile down in the comments of this video. Maybe volatility is telling the XRP army that XRP would be worth 54 cents at some point in time. Maybe that in itself is volatility. Now, mind you, I never said that. What I said directly was, I don't think that's going to happen. And I also said that if it does open up that 10x potential, which actually is still significantly up. That's like 3x from where we're at right now, which, hey, I'll take 3x all day, every day on any one of the securities that I hold, or if it's a crypto token or cryptocurrency, you name it, I would take 3x over a reasonable time period anyway. Over a 5-year period, I would take a 3x guarantee. That would be incredible. But I do think those catalysts are coming. We might have a little bit of pain in the my goodness. We might have a little bit of pain in the near term in the meantime anyway. So we're going to have to watch for that, watch for those deals. I'm building up my cash position. If you guys want to see how the other experts are doing it as well, join our Discord. Use the earner tier. When you do, you'll get access to absolutely everything that the Discord has to offer. The expert panelists that are over there, the chat that goes along with that. You can interact with those. You can also ask the experts. As a matter of fact, you have the bread bot. You have AI charting. You also have advanced charting tools. I'm telling you what, it really does seem endless. And you're part of a community of thousands of members, all there striving for financial freedom with the panel of experts to help you along the way. If you guys want to learn about technical analysis yourself, want to learn about options, want to learn about the bread recipe, how to trade using the bread recipe trading strategy, you can do so using the coursework down in the description. Use code word doctor when you sign up. That's going to save you a ton of cash. In the meantime, guys, hope to see you over in the Discord. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.